Thanks.
Excellent. So thanks everybody for joining us. Thanks Andrei for making the time. I think you've been a speaker at our Q&A sessions the last year as well, if I'm not wrong. So thanks for that. Thanks for taking the time. We've got a bunch of very smart and hardworking and dedicated people here. I know it's the end of the week, Friday afternoon. It's a bit earlier in London than in Eastern Europe. Andrei, I wanted to start this session by asking you a few the fundamental questions that we always ask somebody who's a partner at a fund. So tell us a bit about Accel's latest fund and your investment focus. And after we get after the first questions, I'll ask the others who have joined us to bring up their questions as well. So let's start with Accel London.
Sure, happy to. Yes, I'm one of the partners at Accel based in London. We're one of the large global venture capital firms founded in the early 80s in the Valley and have since expanded to Europe out of London as well as India. We strive to back founders wherever they may be, typically from the Series A up to pre-IPO and everything in between. As you were asking about the latest recent funds, so earlier this year we raised early stage funds across the world. So we have 2 early stage funds, $650 million each in Europe and the US. And we have growth funds as well, 2 growth funds of a couple of $2 billion each. And we, for the early effort, it's very much a focus on backing companies at the Series A. These days, that can mean a lot of things. Can be, pre-revenue, still concept stage, or it can be already post-revenue with a nice early scaling. But definitely, companies that when they're at their stage of kind of needing to press the pedal and go global or significantly expand their team and commercial focus. And then on the growth side, it's very much companies that are perhaps already leaders in their categories or early leaders, and they need that extra fuel to grow much faster, go bigger, expand into other verticals, potentially acquire other companies, and just further build their dominating positions.
Just a second, sorry, my kid came home.
Very exciting. And I would say maybe
quite an entrance.
maybe to add that we're very patient investors. So our average holding period is 8-9 years. So even in such a crazy environment, we've been trying to kind of keep our heads down, working closely with the founders we back. We know building a company takes many years and many ups and downs. So we're happy to be close supporters of the founders we work with.
So you mentioned
a long journey.
Yeah, you mentioned early stage. Early stage, does it include seed or is it Series A and beyond? Or
we do seed occasionally as well, and I think it's especially in areas we're deep in, aligned with what we call prepared mind efforts, and these are areas where we build significant expertise, whether it's security or fintech or developer tools. I also think seed is something that's best done locally. So I think for seed, you kind of need some level of close interaction. These days with remote is a bit different, but still at least the same time zone does help. So you want to make sure because the iteration cycles typically are quite fast in seed, and you kind of want to know in a few months whether something is working or it's not. And I think being close to founders, specifically at that stage, is important.
So what type of from let's say a volume point of view, how does a typical seed deal looks for you and a typical Series A? Although, I mean, in these crazy times, it's a tricky question, this one, but I was just wondering.
Sure, yeah. So it's we're actually very low volume, if that makes sense. So we're still very we're very thematic, very conviction driven. Each relationship we formalize is a meaningful relationship. So I'm very close to every single founder I work with, whether we invested $1 million or $100 million. So by definition, we cannot do too much. So each of us on the partner side may back 1, 2, 3 companies per year max. Each of us may maintain a dozen to 15 or so max relationships at any point in time, right? And that's why we keep a very high bar. So it's, if we think of our seed effort, it's not a separate seed effort. It's not like it's a volume game and you're trying to build a pipeline of sorts. It's still there's a very high bar, and we just happen to intersect the company we're really passionate about and the team we're passionate about the seed, and we back them then. But it's probably still with a similar bar as the Series A.
Right. So the question when it comes to money, it's, I mean, I'm wondering, like, I'm trying to put myself in the shoes of the founders, and I assume they ask themselves, when should I contact Accel for a round which is, how big for a company who can grow, how fast, or how far? What are the criteria that you would define for a company who would be raising a round and wants to put Accel on the list?
Specifically at the seed, you mean, or?
Yeah, it's at seed, because right now our founders are at seed level, and you can mention Series A as well.
Yeah. I think it's case by case. I mean, sometimes there are very new emerging areas. So I areas, for example, around crypto today or Web3 or so, where they're just not, there are a few later stage companies, but a lot of the innovation is still very early. And then, if we find a team with a very unique product proposition, a very kind of, we think there's a lot of uniqueness, then there's not much you need to show. If there's a more established category, I would say, us building some conviction that this is a company and a team that wants to grow internationally, that they're kind of very hungry to and able to recruit a team outside of Romania. I think that would be very important. So yeah, I mean, it's when I also think of seeds, it's you also want to know what you're funding towards. So having a clear plan of of building towards a certain milestone would help. So we're probably less prepared to fund companies, let's say, to do R&D or to do that kind of early customer discovery. But insofar as there's a pretty clear, compelling milestone, let's say a year ahead, and there's a pretty clear plan on how to get there, I think we'd be more prepared to do that. But and also these seeds can vary in amount. So yeah, we're also kind of big fans of seeds that actually allow you to get somewhere, because sometimes if you're raising too small of an amount, you'll be fundraising again in 5 months from now. So probably our seeds are also probably on the larger side. Yeah, I think 3, 4, 5+ million dollars.
Ilya, you're next.
Yeah.
Sorry. Just before that, I want to tell you, Andrei, that in this batch of Spotlight, and generally, I think in this evening and in this group, less than half of the founders are from Romania.
Okay, cool.
So it's
good to know.
It's quite an international crowd. Yeah, Ilya, you go first.
Yeah, thanks a lot, Bogdan. Hi, Andrei. Nice to meet you.
Hi, Ilya.
I'm co-founder of BitScout, and we're building Zapier with Brains. And I have a question. We're early stage founders, so we are looking for a first round because we have launched products and we have paying clients. Now, if we look statistically speaking, the toughest part is to raise a pre-seed, then to go from pre-seed to seed is like lots of startups fail at that stage because it's kind of like you're looking for a validation of the solution on the market. And then there is a bigger percentage that fail from seed to Series A because you don't find a product market fit, which is technically one of the biggest reasons why startups fail. So essentially what happens is at Series A, when I look at Series A, it's basically winners. So my question to you is, can you please tell me challenges of a VC in Series A round? Because what it looks for me as a founder, it's very easy to, to fund at Series A because it's basically you have everything figured out and you just look for
no, that's a good question. I would say that's perhaps how the old world of venture used to look like maybe 10 years ago. That has changed dramatically. And right now, I think for good reason, there's a lot of competition, which means kind of the whole industry had shifted earlier. That's one aspect too. In some markets and some companies, you just need to raise a lot of money before you have that kind of clear validation that things are working. Security being an example. So if you look at Israeli seeds in security, they tend to be $10-20 million. Series A's, they're kind of a bit higher. So yeah, we could say, hey, let's say if you only want to do Series A when things have product market fit, you can essentially be in many categories. Actually, these days, a lot of the Series A's, you don't have that kind of hair at all. May have early customers. Some may be pre. I wish we had the luxury of 100K MRR growing everything up and do the right, but that's less the case these days.
So, but why? Well, if you look 5 years back, the seed round, even in San Francisco, was between maximum 5 million raised with 10 million valuation. But right now, this people announce seed rounds, I don't know, maybe 7 million, which is technically a Series A. So I was wondering what happened and what do you think?
Well, there's a lot of it. It's an asset class to invest in for many years. There's a lot of demand for venture, so the capital side, but then obviously there are incredibly good founders deciding to build companies, right? And especially in geos outside of San Francisco, think of Europe, that in companies emerging right now, you have a lot of winners too. So it's for good reason, there's a lot more funding. Founders have more. It's I do think for at least for some founders, it's easier, not for all, unfortunately, but there's definitely more. And then the point I would is at the later, when you could argue, hey, thing obvious, pricing reflect, and you have wrapping your mind around, is this price you're paying kind of crazy or not? You have to go, founder you're backing, see if you have the right conviction level.
Okay. All right. Thanks. I will let other questions.
Sure.
Yeah. Before moving to Igor, I just want to add that PMF is not like a 0-1 type of situation. PMF is something that you can always maximize, and don't necessarily raise the Series A when that's maximized. So you still have to work on the product, and there is a question around that as well, I think. Igor, your call.
Yeah. So, hey, I'm Igor, lawyer CEO. We provide automatic intellectual property protection. So my question is quite practical. You said about funds that work in seed area. Could you please provide some means of communication through which we can connect this fund for like future working or something like that.
Hi, Igor. You mean other funds who invest at the seed or?
No,
Accel?
your fund, you said that you have particular funds that working in seed. So
Yeah. Sure. We don't have a specific team or specific fund, so this is still the early stage effort, and each of us who lead investments all across stages, each of us would do 1 or 2 seeds per year, depending if we find the right teams. So it's still, I would say, it's a pretty select effort, the same our Series A investing is, and B and growth and everything. Yeah.
Got it. So can you provide some emails or like application form?
Sure. No, happy for Bogdan to share after the call.
Oh,
No issue.
Thanks.
Yeah. So let's go to Rafal.
Yeah, hello everyone. I've got a simple question. What's your investment focus? Do you invest in solutions that are hardware and software together, or only in the software solutions, SaaS and so on?
Yeah, I think we've gotten pretty flexible. We're essentially looking for companies that can that have the right model to scale fast and become very, very large. So we're not really dogmatic around what they do or sector or so. Historically, hardware has been tougher because of a lower margin profile. It's more commoditized, but there have also been exceptions. I mean, we back companies like DJI in drones, or Dropcam, which sold to Nest and became Nest Cam. So whenever we think, so Dropcam is a good example, right? Where you have a combination of software and hardware, and in their case, the camera was the hook to sell cloud subscriptions for the data. So if we find there's an interesting software roadmap to hardware companies, then that gets us excited.
Okay, so thanks you.
Kenneth, you're the next.
Hey, Andrei. Nice to meet you. We are trade finance marketplace, connect SMEs with global lenders. We actually based in London, and also we have the tech team in Poland and in Lithuania. My question is actually that most of our revenue right now is generating from Asia, Hong Kong, and then Singapore. But we're actually getting traction from the European counterparts. But I was just wondering if you guys invest, would you invest company like us that we don't have domestic revenue from European continental in the UK, like what we do in Hong Kong and in Singapore, and in the same time we have co-investors from Japan and Hong Kong to join the next round. Yeah.
Sure. I can't. I don't. We're not dogmatic about this. We also want to back companies where we think we can help. Mm-hmm. I think it depends on where the center of gravity of the company is. If we feel is, for example, heavily in Hong Kong, we don't have. They're probably better investors suited to help out companies over there. But for example, I just invested in a company in Vietnam called SkyMavis. SkyMavis building this game, Axie Infinity. They happen to come out of Vietnam, but they're building a global game, global community. Mm-hmm. So where they're coming from matters a bit less. So I think it's hard to kind of give a single rule, because our business is built on exceptions. But I would say it's, the starting point matters a bit less. It's more where you're headed.
Yeah, sure. Yeah, and by the way, we just we actually the cohort of Tech Nation FinTech 4.0 in the UK. So
cool.
Congrats. So we actually getting more traction recently from the customers from Asia, because they're dealing with the buyers from Europe and in the US. So they're also helping their buyers to raise capitals. That's why we want to have a European investors to help us to back us, so that we can easier to work with the domestic lenders in Europe. Yeah.
Sounds good.
Yeah, cool. Thank you. Cheers. Thank you.
Thank you.
Joanna?
Hello. So hi, I'm Ioana. I'm the CEO of Convi, and our mission is to enable anyone to partially own alternative assets, investment grade assets like luxury watches, fine wine. So our goal is to enable anyone to build wealth and diversify their portfolio with alternative assets. And I was wondering about your view on conflicts of interest. So just as an example, Accel has invested in one of our US competitors, Rally, and we have spoken to funds that have invested in our competition. One of them, through a third party, also invested in our competition, one of our investors. And there's been a fine line in which should we even pursue these investors if they have already backed the competitor?
Yeah, I would say, I mean, it's hard to speak with comment about other firms. For us, we tend to, there's a couple of things. So one, if two companies are directly head to head, and to me, directly head to head means for one to win, the other company has to lose. Then we try to avoid those conflicts because, when we back a company, the whole global Accel is behind that company, and it's weird. That being said, in reality, and kind of from our experience, not investing in many companies over the years because of kind of being very onerous with this rule, in reality, what you realize is actually a lot of companies are not head to head because so many of these so many companies are very much driven by the founder's vision, and founders end up taking companies in a very different way or going after the same market from slightly different angles. And if there's a large market, there will most likely be multiple winners. It's rare to have an amazing market with just one winner. So that's why these days we're a bit more open-minded. I would say from your, if I were in your shoes, kind of engaging with investors, I would in the end come down to the relationship, right? Because you also have situations when folks try to speak with you to kind of get information to, get smarter, but they don't have real intent. On the other hand, sometimes you have partners you build a very strong relationship with who you can tell they're very committed and their interest is earnest. And in that case, it's worth exploring that and addressing the conflict openly. Because I would say most conflicts end up not panning out in the end.
Yeah, in my view, also US competitors are in completely different jurisdictions, and since I am in a very highly regulated field, I don't see it as an issue. I have seen it from some funds in the UK, but I mean, in my view, worst thing that can happen is that one expands to another market and they buy each other, and then the fund wins anyway. Yeah.
Right.
Until we have some more questions, Andrei, I wanted to ask you. I mean, you talked a lot about relationship, about working with the founders, about picking the best teams, and I kind of, let's say, draw a red line there, like connecting all these dots, and I would assume that the team is a highly important element to you, right? So am I right? I mean, you can.
Yeah, of course.
This is the part where you can say no.
The most important element. Yeah.
And then the question would be, how do you define a good team? Like if you look at the teams that you are working right now with, what makes some of them great? And
for sure.
Are they great in the same way, or are they great in different ways?
Yeah, I would say great in different ways, but sometimes you have certain commonalities. I would say 100% kind of relentless focus. I think this matters a lot. I would say some early indication that this team has a unique insight into a market, either coming from past experience or through just kind of grinding out figuring out a new space. But we want to back those teams that see a bit behind corners or understand opportunity before it's obvious, and also who are kind of nimble to navigate, a very challenging or kind of changing market environment. I think folks are able to hire well and surround themselves with good people, and especially at the seed, because at the seed you don't have that proof point, right? And it's that's a big part we're trying to gauge. Is this going to be a CEO who will be able to inspire others, to attract others on the mission? Because in some sense, when everything is working, I mean, obviously you have other challenges then, but in the early years, you will not have potentially a lot of funding, or it's just such a competitive hiring market right now. So even if you have the funding, right, you'll have to compete with Facebook and Google for engineers, and many other well-funded startups. So for someone to join your mission, someone good, you kind of need to make a very strong case. So whether it's a very proprietary network you have from folks you've worked in the past who trust you, or you're one of those visionary leaders that people are keen to follow, I think some sort of shortcut or ability to recruit matters a lot. And yeah, I would say, a lot of founders we back are first-time entrepreneurs. Many, they span all age groups. There's no kind of set background. So there's a lot of the things around kind of the more operational sides that we can help with as board members. So not all of the CEOs we back are very strong in finance, for example, or they may not know some of the kind of the key operational things, but we can help hire to complement them or help as board members. So I think we focus much more on the strengths, obviously making sure there's no shortcuts when it comes to, core principles or values or ethics. But, we try to focus on the strengths because we know we can hire around the weaknesses or kind of help complement them.
You mentioned relentless focus. What does relentless focus mean? Does it mean like working 80 hours a week, or what does that more specifically mean? Or I don't know if you look at a team who is relentlessly focusing on their startup, how do you define that?
Yeah, it's well, sometimes it's correlated with working long hours. Doesn't always have to be, and I would say the more some of the more seasoned founders know kind of how to be 80-20 and know kind of which parts to focus on, if that makes sense, to have that better life balance. But it's you just know this is kind of 100% of what they want to do. And
right, so not do anything else.
Yeah, I would say so. And kind of living and breathing topic, also showing that they've kind of lived and breathed this topic before. So there's seeing a very strong passion about the field, which then correlates with that ability to see around corners. Also, correlates with their ability to withstand tough times, right? Because if you have a genuine passion for what you're doing, a kind of genuine connection, and you'll be able to keep the ship steady if you may have a challenging funding round, or there may be a economic crisis and some customers may leave. So it's I have some examples right now, but for example, right now in crypto, right, like you have a lot of folks who are seeing the activity and kind of want to jump in, but some may not have that level of passion and depth to really stick with it if there's another winter coming, right? So we kind of not want to back teams who we know will be in it and kind of very committed.
Right. Dominique, I think you have a question.
Yeah, sure. Hi, hello. My name is Dominic. I'm co-founder of Teamshark. Teamshark is a platform for cohort-based education based on software in general, so more tech and from medical to IT. And my question is about the forming of board of directors, because we finalized our pre-seed round yesterday, to be honest, and now we are in times of forming the board of directors. And as a co-founders, we have some seats, of course, there, and what skills and what people choose to board of directors, the best people to do the job. So what's our advice about?
Sure, and just to understand, so this is about the external board members you'd bring?
Yeah.
And would you bring them from your investor group or outside?
We have one seat for our investor and two seats that we choose together with our investor, and two that we bring to the board. So two seats. So altogether.
I mean, in general, I would say, and I think the market is moving in this direction, that I think it's really helpful to keep boards small.
Yeah.
I don't think you want heavy governance at this stage. So we see many companies all the way to Series B, C, who still have founder controlled boards. So especially at kind of the earlier stage, having kind of 3 outside folks on board, I find that's already high. If that's how you designed it, then I think it's kind of good to know what are the areas where you need support, kind of in terms of complementing you. I mean, there are some board members who are a bit more functional, which can be helpful at your early stage. So let's say if you're a technical team, you may want a strong kind of commercial person. But then there are just folks who are great board members who can kind of help with being great advisors around founder issues and kind of have culture and being just kind of good stewards of the company. And especially as you scale, having some of these more professional board members who tend to be former operators or former investors who've been board members of other companies and just kind of have board experience, I think that will help. But early on, I would prioritize folks who just will give you a shortcut into whatever the market is you're targeting, who can help you hire, can help you interview and recruit, and kind of help you calibrate the right candidates. They can have some inroads into or network in the market you're active in. It's just folks you'd be able to build trust with, and want to have a call every couple of weeks to kind of get their advice.
Okay, thanks very much.
Thanks, Dominic. Paul, you're next.
Yeah, hi, Paul from Octavic here. Sorry for the no video, but I've actually got no electricity, so I'm in the dark. So
wow, thanks for joining.
Cool, my pleasure. So I've actually 2 questions. One is a follow-up on what you said earlier. I've just heard, let's say, opinion from a Romanian VC. Actually, he was going like this. So I want you to have no personal life. I want you to ignore your family or everything and just focus and be available all the time and go all in. I would like to hear another investor's opinion on that. How do you see this? Is this healthy, or is this the kind of VC that you really want to get on board? And the second question would be around, you mentioned founders' weaknesses. So it's clear, us as founders, maybe we come from a technical or from a business side, we have weaknesses on several sides. Is it better in early stages to, focus on getting help, like hiring for help in those weakness areas, or is it better to try to improve yourself in those areas? Thank you.
Yeah, 2 great questions. I mean, on the first one, I would tell that investor to do the same for you if they invest, right? I mean, they should drop everything and work 24/7. I mean, I think that's just stupid and shows a lack of self-awareness and compassion and any understanding. So I would just kind of ignore. And I think to me, that just strikes me as a very old world type comment when you had, this dynamic 10 years ago where, kind of huge, and especially in ecosystems without a lot of funding available, founders at the mercy of investors who, kind of take advantage. But I don't think that's the norm. And, to me, what matters is, will you be able to build a large, enduring company one day? And this takes many, many years. And if you burn out in a few months, then that's for no one's benefit. And obviously, I mean, there will be times in your company's journey when you may have underhired, or you'll be under extreme stress for whatever reason. And that's when you actually want to lean on your co-founders, executive team, board, investors to help. But that shouldn't be the default.
This guy sounded like I don't know. I want to make you my bitch because I'm the VC, so you must be available and ignore everything else. So he was.
I wouldn't worry. There's many bad folks out there. But I think the second question is I would like to focus on is in that I think what will make the company special is your strengths, right? And strength in product or strength in understanding a market. That being said, your weaknesses kind of may drag you down / kind of block you down the road. So, I mean, essentially, speaking, for example, for a CEO role, eventually, if you end up growing a company of any scale, you will have to span both product and commercial well. And certainly some founders will have an affinity for either, for one or the other. But I'm just making an example. Let's say if you're a very strong technical founder, building a strong kind of building an engineering type product, let's say a platform for developers, and it's still a very developer centric company and so on, which is great. But at some point you'll hit a wall if you never spend time thinking about the commercial side and building those skills. And maybe that's a time to recruit an external CEO, if that makes sense. But if which it can be fine, right? But I would encourage, because as founder you have and especially as CEO, it's a pretty multifaceted role, and I think it does help to be aware of your weaknesses, kind of push yourself to grow, and at every stage of the company you'll have A, you'll by doing, and B, kind of have more from peers, from other mentors you'll meet who are maybe a stage or two ahead of you. You can, but develop is key.
Great, thank you.
Thanks, Paul. Andrei, I have a question. Alex has raised his hand, but will be Alex. I'll give it to you. I'll ask you to ask your question with a 2-minute delay. So, Andrei, you mentioned that you want to build this relation with founders, and the founder relation is important. Now, imagine you have these folks in this call, and they may be raising a seed round or maybe a Series A round, hopefully in a couple of years from now, and they do want to kind of engage with you, and even at least try to start this kind of connection, see how this goes. How should they approach? What is the best way to approach Accel? Is it just sending a deck? Is it getting an intro from somebody? Is it, I don't know, how have things happened until now with the previous teams?
Yeah, I think it's all the above. Actually, a lot of the investments we do, we actually reach out proactively. So sometimes there's this preconception, especially for the large VCs, that hey, we'll just kind of sit around and people send us amazing deals for us to do. I would say that's pretty rare. I mean, maybe it used to be the case, but these days, and this also, I guess, Accel style to be really proactive, but we get very deep in certain sectors and we reach out to the founders we think we want to back. But that being said, we do get introductions. We do get founders reach out directly. We do get to meet folks at events or through deep dives we do or kind of informal channels. I think there's no right or wrong way to engage. It's the kind of the earlier you get on our radar, the better. There's always like and this is not just about Accel. I think it's many investors in general. I think the better the investor, the less time they have. So I found people in this industry tending to be pretty nice. It's more if they don't respond, it's just because they have hundreds of emails kind of waiting in their inbox. So we would love to kind of meet, spend time with all the folks we like. It's just there's only so many hours in the day. So I think the more focused and targeted that interaction, the better. The kind of targeting the right partner, for example, who spent time in your topic, thinking about the right stage to engage. When you think there's kind of good feedback you can get, or want to push something forward. So it's I think it takes kind of both sides to think, what will drive a meaningful and productive interaction.
Just a quick follow-up on this one. How do you know
Sure.
which partner has spent time on a certain topic or vertical?
Well, I think, there's a lot out there. Many investors right now have more or less public profiles, and you can see what investments they've done, what they do on Twitter, what interests they have. And I think it's helpful for you. I mean, I'm much more likely to engage with founders in specific areas I'm very passionate about. And also in general, I would say investors are more prone to back companies before things are obvious in areas they have some familiarity, or if you're part of a similar network, they have some familiarity with, or any kind of shortcuts you can find or any common ground, that always helps.
Excellent. Okay, thank you.
Because right now everyone is, how to reach anyone, right? Like everyone's on most social networks, LinkedIn, Telegram, Twitter, and so on, right? So it's not a problem of reaching someone. It's a problem of kind of getting that person's time and engagement. And yeah, it's not always easy.
Got it. Alexandru, your turn.
Hi, Andrei, and thank you so much for your time so far and for the great insights. It's been great.
Hey there. Thank you.
I have a question regarding whether you have already invested in Web3 companies, maybe yourself as an individual or with Accel, and also what is your take on the adoption of Web3 generally? Because I've seen a graph coming from I think in a report in Anderson Horowitz, and it looks quite scary. I mean, they're comparing internet adoption to Web3 adoption, and apparently there is no bright future, or at least no high volume in the adoption of Web3 anytime soon. So any kind of thoughts you could share on that would be great.
Yeah, so I'm a huge fan of Web3, and both personally through work I've done with certain communities or in NFTs, and also with Accel. This has gotten closer. This has gotten me closer to this world. So with Accel, I've backed 2 gaming companies. So one has been Sky Mavis Axie Infinity, which is it's the biggest blockchain-based gaming company out there. And another one has been So Rare, which is a digital collectibles platform for sports. Think, sports cards, on NFTs and having really interesting dynamics between clubs, players, and fans. And then I've also backed a software company called Tenderly out of Serbia. They're building tools for developers to build decentralized apps. I would say in general, beyond the crazy interest and innovation over the past year, I do think adoption should happen faster than the internet, because if you think of the internet, that's something new, and this adoption just kind of happened very organically, versus now distribution has been much more solved. And especially if you have Web3 masked as part of a broader consumer app, think of a game, then I mean, Sorare fans or Axie Infinity fans, they don't think of the blockchain or kind of what's underneath. So it's more of a means to an end. And especially if you're writing established Web2 platforms for distributions like Twitter or influencer channels or whatever, Discord, you can kind of really have Web3 as a Trojan horse and reach scale pretty fast. I mean, if you look at Axie Infinity, they have now 2 million daily actives in a few months, $1 billion in revenue to date, also in a few months. And this kind of growth we hadn't seen just in general for any gaming company. So in general, I think, I'm pretty bullish on seeing much more in this space.
Okay, thank you so much.
Thank you, Marius. You're next.
Thanks. Hi, Andrei. I'm Marius. I'm
Hi
CEO
there.
of MetaBeta, and we're building an investment platform to help startups fundraise easier from early stage investors. And because you've mentioned about having a proactive approach in finding startups, I wanted to ask, what are the biggest challenges in finding good startups? And of course, if you can share, how do you actually find ones that do not come through warm intros? And also, as a curiosity, if you can tell, what's the percentage for Accel between warm intros in deals versus proactive?
Yeah, I would say it's probably half and half, kind of outbound, inbound. We tend to be very thematic. So, tying to the previous question, for example, I've been very interested in developer tools for blockchain developers. So obviously it's like a new category. I had done a lot in developer tools with Accel in more normal, for normal developers, right? And it's a very early category. So in that case, I'm just keen to meet essentially every interesting team building something in that space. So I have a bias for learning, a bias to engage. I'm reaching out to folks I think are building something really interesting. Other people know in the community that I'm looking for something there, so I get introduced. So it's it's a bit of a self-fulfilling thing. Tenderly, it's a company we reached out to out of Serbia, and we kind of really like what they were doing from afar, and we engaged, and that was great. So I would say for us, what helps is being very thematic. Another thing is sometimes we like to build relationships with people who, let's say, have a track record of having built strong products before, and we may engage with them before they may even start doing something. So, and this is particularly around kind of the strong product organizations in our portfolio. I'm picking the example of Monzo, which is the UK neobank. They have a reputation for hiring very strong product people. So I like to meet those folks, and when they decide to build their next thing, we typically get a call. It's a lot of noise out there, right? And it's there's just so many companies, we just don't have enough hours in. While we could strive for 100% coverage, 5-10 years ago, right now it's just impossible. So that's why we try to be much more deliberate around areas we're interested in, networks we think are highly likely to be breeding grounds for good entrepreneurs. So yeah, it's a combination of things.
Marius, you're on mute.
Thank you. I want to say thank you.
Cool. Let's touch this topic as well, because we've talked about teams building relationships, stuff like that. I wanted to ask, what are if there are a few verticals or themes that you're looking at more closely than others, and which interest you? Web 3.0 being one of them, we got that. What else? I've seen a lot of gaming activity, I think, on your side.
Yeah, yeah. So Web3 gaming, but gaming has also been kind of blockchain gaming. So maybe it's in the same bucket. I've been spending a lot of time and done several investments in low code, no code. I do think, especially for enterprises, there's heavy demand for platforms that allow them to build software faster. Open source as a broader theme is something I've been excited about, where a lot of companies right now have an open source first vendor approach, and you can have amazing organic distribution and developer love work in your favor. What else? It's a firm, we've been spending a lot of time in, I'm thinking of kind of new areas, but embedded fintech, embedded insurance is one that's interesting, where so many traditional marketplaces or software companies right now are becoming fintech companies, and being able to embed financial services in their offering, whether it's payments or a current account or FX service. So having kind of that infrastructure layer that enables that is quite interesting. Yeah, tools around the creator economy, which also I guess ties a bit to Web3, but lots of folks right now are not keen or don't want to work, set jobs, and they span, many different organizations. They kind of want to build their own persona, and this is beyond freelancing, right? But they want to build their own presence online and being able to sell their service or, capitalize on their brand, and tools that enable them to do that, I think are becoming very needed. Yeah, we always try to stay open. It's what's fun about this job is that every few months there's a new sector appearing that you kind of have to get smart on very quickly.
What is the your take on the impact of COVID going further? I mean, there are a few meta trends, like, I don't know, the Great Resignation. I was just reading about that in TechCrunch the other day. I found it to be a bit dramatic, but hey, it's TechCrunch. And so you have these trends that have been kind of started by COVID, in terms of working remotely, more focus on online education, online health. Do you expect these fires to burn down, or is this a thing that will kind of continue from now on to exist, or to accelerate in the technology world?
Yeah, I mean, it's so hard to say, but I think most things will stick. And especially the things that have gone in the direction of more efficiency, more transparency, speed. I mean, let's take this example, right? That's very relevant. Raising a round. It used to be that you would meet a lot of investors face to face, go to their office, or people would travel to yours, kind of take weeks. I mean, it still takes long, but these days things have gone much faster, and I've now backed half a dozen teams since COVID, where I kind of first invested and then met the founders later. Some founders I haven't met yet. And I think that's becoming normal, right? So I don't think people will suddenly, kind of turn back to the days where, oh, we can do this round in a week, but no, let's take a month because, we want to. It's just kind of very hard. That cat's out of the bag now, right? And same with medical services, same with ordering food. As soon as people discover convenience, it's hard to give back. So yeah, no, I mean, it will have an interesting impact. I'm looking at our office, right? We've had an open office for a while, it's never full. Because I'm at home today, right? I've been working in the office every day, but today I decided to work from home. So there's definitely kind of some flexibility that's here to stay, and this will impact how we do work, how certain industries scale. Yeah, which is great.
Yeah, got it. So right now, how much of your work is over Zoom, Skype, Google Meet, etc.? I mean, do you do investments exclusively over Zoom?
I would say the majority, and especially everything we do is so international. I mean, even in London, right? I mean, you can be different corners of London. It takes an hour to get from place to place. So Zoom is still more effective. I would say our internal meetings, and that's I found helpful with our core partnership to meet in person once a week. I've definitely seen a lot of benefit in that. But yeah, probably still 80% of our meetings are Zoom. Yeah.
Right. How fast do you make a decision? You were mentioning a week. Do you have such a fast decision process? Like you meet a company and
Yeah,
send the term sheet?
recently backed a company. Yeah, from I had known them from before.
Okay, so it wasn't a new connection.
Yeah, I think it's harder when it's very new, but we kind of rekindled the dialogue after 6 months, and essentially we signed a term sheet 2 days later after we reconnected. So sometimes especially if there's some meaningful interaction in the past, we can get up to speed very quickly to come to a decision. Yeah, and it's the markets move faster. B, so as much as we can, we strive to build a proprietary relationship with the teams, or we don't like these kind of huge auction processes or so kind of that become too transactional. So insofar as we can align one-on-one with the team to work together and put our best foot forward to come with a strong offer, then yeah, we're happy to do that.
Okay. We were discussing about getting in touch, staying in touch. How do you stay in touch with founders? You mentioned that you've rekindled your connection with these folks after 6 months. That's your baby, right? Okay. So it's not my baby and it's not Alex's baby, it's your baby. I just wanted to make that clear because we have some kids screaming around all of us at home. Cool. So about staying in touch, is that like, do you do that, or is there a process for which you would recommend the founder to discuss with you? I mean, sometimes I meet founders who have a seed stage startup, and it's not clear if it can be like a unicorn or like something significant, or it's like could bring an okay exit, like in hundreds of millions, I don't know. And I would assume that you kind of want to stay in touch with those who are promising, but are kind of unclear if they are aligned with the exits that you have to have for a 650 million fund. How do you do that? Do you like expect regular updates? Do you call them from time to time?
I think it's very organic, and it's very hard to do this right, across kind of all the founders we engage with. I mean, as a firm, just our team in London, we probably touch 3,000 companies a year or so. Like it's and these are folks we actually have a proper scheduled interaction with. It's not just kind of saying hi at the conference. So it's very hard to have a formal process with all these folks. And I would actually discourage that. I mean, the last thing I want is kind of every day, 100 newsletters kind of in my inbox. With this team, I think it was very organic. We had a couple of good interactions when they did their seed, a couple of questions we had back then, which they answered 6 months later, and then it was all good. So I don't think we had any dialogue in between. I would say less is more. And it's, it's all around kind of the delta and what you're communicating, and yeah, building that connection.
Okay.
Can I double down on that, Bogdan?
Please do.
How would the initial conversation go so that the follow-up is a good one to actually make you stay in touch? So what would be the first things that you want to find out in a cold relationship that you're just trying to figure out who are they, what are they doing, and so on and so forth, so that, yeah, the follow-up and the further experiments will show you that they managed or not to actually build something, or what did they learn? But how would you get them open? Yeah.
Yes, I would say, and by the way, that goes two ways, right? Because I mean, as much as we choose the founders want to work with, the founders want to choose us. And if we're assholes in that first meeting, we will not get a second meeting. So kind of, you know, we want to make sure there's mutual excitement to stay engaged. So I'm answering from like our perspective. You know, back in that first meeting, we already identified the founders being super scrappy. They had done a lot with little. In their case, they're selling a developer product, and they had very interesting adoption. Couldn't quite monetize it very successfully, but yeah, very strong adoption, very scrappy, very motivated. It was a pretty thin product, so you know, kind of had questions. Hey, can this be a product that enterprises will pay a lot for? And you know, will you be able to kind of have a more, let's say, ambitious, expansive product strategy beyond kind of this little thing you've built that seems to kind of, you know, address a pain, but is that a big pain? I don't know. So, you know, kind of to summarize, there were a lot of things I liked, a couple of questions I had, and then 6 months later, they had answered those questions, and it was clear. So I think it's good to have some, even if it's not properly spelled out on paper, which, you know, this wasn't, but kind of have to structure some thoughts around what would be expectations for next interaction. Because, you know, just kind of having, hey, let's catch up in 6 months, it's not productive if there's nothing to be caught up on, you know, or, you know, conversely, you could catch up even earlier if there's something. So I do think there has to be some sort of mutual excitement and kind of some conviction on our side that, hey, would actually be really keen to back you if you answer these 2 or 3 questions. And communicating that with the team so they also kind of know what's expected. And that's why I think as a follow-up, I think there's a general point as founders, to the extent that you can, it's good to get some explicit feedback from investors. And you know, investors love to give very nondescript feedback because A, it's easy, and B, it's a bit like kind of hedging yourself, because you kind of want to be super open-ended and just kind of leave all options open. But to the extent that you can get some productive feedback, that's helpful.
Cool. Joanna, it's your turn.
Yes, so I had a question about your comment about sending email newsletters, because it contradicted what most investors told me. So I have been sending while we're fundraising every 2 weeks. Some people told me send every week. I just thought that if I'm writing something, it should be at least something with substance. So I'm doing it every week, 2 weeks. And I do plan to continue sending them out, maybe every month, to the people that are relevant, but I don't expect them to answer. I just expect them to, maybe if they want to hear back from us in 6 months to have a call, they look back in their emails and they check. What's your view on that? You don't like receiving updates?
No, I think it's, I can comment, I can tell what kind of the right frequency is. Also depends for whom you're targeting that, right? So if it's seed funds or angels you may want to engage anyway in the next few months, probably a faster frequency makes sense. if it's folks you may want to work with 2-3 years down the road, probably emailing them every 2 weeks is probably an overkill. So targeting things is helpful. I think also short and sweet is helpful. Interest kind of key updates that are meaningful and key asks. You kind of have to think yourself what you're getting out of it, and is it productive, right? So
well, I thought actually at some point I thought to not update seed investors when we're raising pre-seed, but actually the ones that are interested in our product, they're open to support and they intro me to people. And this also
no, I do
shows me
think so.
a good
Definitely a
sign,
good
and that I want to work with them in the future. And also say
Yeah.
I'm going to the city they live in, I know to reach to them to maybe meet for coffee.
Yeah, no, I think that's a great route to build rapport in an easy way.
Thank you.
Cool. Thank you, Anna. Kenneth, you're next.
Yes, I just suddenly remember like one questions. Actually, I was just wonder for Accel, you guys invest into the London entity, like the UK entity, or you find with investing into, for example, in Ireland or maybe Cayman Island?
Yeah, we're pretty flexible.
Oh, okay.
I think
cool.
it's less around what we can do. It's more on what's best for the company. So I won't comment on Cayman, but it's, for example, with some companies, we encourage them to flip to a, let's say, more common jurisdiction, because that will make it easier. Like options treatment is not equal in each jurisdiction. Some investors may have restrictions in certain jurisdictions. I mean, for example, yeah, there's so many examples, but I would say the more you can have a typical Delaware company or UK company, or
right,
so
okay.
the easier your life will be, the lower the legal costs. Yeah.
Cool. Okay.
I think
Thank
Ireland
so
should be fine. Yeah.
Yeah. Cool. Thanks.
Excellent. Folks, we've got 10 more minutes. So ramp up your last questions, because then we'll let Andrei go and have a chat with that with the baby, you know, for the rest of the evening. And I'll have one with mine. The last thing that I wanted to touch was about the size of the market and like how significant a company was. I mean, I was talking loudly about unicorns, but you know, what's a unicorn these days? Maybe now you need a decacorn to be able to properly return a 650 million fund. So when you look at a company and you say it has to have proper, potentially a significant size, what like order of magnitude do you think of, or you know, how do you evaluate that when you do sort of a potential market sizing thing?
Yeah, it's a good question. I think it's a hard one to get right, and one we often get wrong. I mean, some markets are replacement markets, where, you know, there's some big public incumbents and you're kind of making a story why you're building the next generation that's much better. And to some extent, SaaS over the last, you know, decade has been an easier category to invest in, because there was always some on-premise stodgy incumbent you'd be replacing. But then there are many examples of companies that are creating new markets, whether it's, you know, food delivery or even, you know, UiPath with RPA. You know, they may be, I mean, or kind of the replacement market is a bit broader than you think, right? So, you know, in UiPath case, there's no kind of existing RPA market, but you can argue they're fighting, you know, custom software or, you know, broader inefficiencies, right? So sometimes actually looking at things from a bottoms-up perspective helps a lot. So seeing what your early customers are willing to spend, so sometimes just having one enterprise pay you 100K, that's enough to, and kind of for us getting a sense that, hey, that's repeatable and that's not just a fluke. That's enough of a sign that, hey, there's a potentially interesting market over here. And obviously that's where depth and kind of thematic focus helps a lot on our side, because, for every security company we back, we will have met and backed, we've backed dozens of other security companies, we'll have met hundreds. So we have a bit more context, so we're hopefully better able to assess if there's a new pre-seed company. We kind of have a view if that's an interesting market or not. But yeah, it's tough to get right, and kind of any proxies you can hang on to are helpful.
Okay, Ilya, you have a question.
Yeah, I was wondering about the markets, that the question that mostly related to the situation when you are building a horizontal platform. So normally it's more easier to assess a verticalized solution. So for example, that you build something very well aligned that goes directly to construction industry. But if you are building a horizontal platform, it's very difficult to make a case, because you basically are solving, we are solving a problem in project management. Project management is a very wide category. In the early stage, it's clear we have to be focused on certain verticals to be more efficient. But then how do we make a case for a horizontal part of it? That we're not going to win only in that tiny part that we are helping now in facility management, but that's the same problem that happens in marketing, in sales, and because it's managing projects, which is how we do work today.
Yeah. Also, that's an interesting question. I mean, we backed a company called Miro in collaboration, for example, and they started with product teams, and now it's become a standard for many other functions. I think in general, when it's a very horizontal product, you kind of do a bit of both. I think it does help to zoom in on a certain vertical or a certain persona, like whether it's product people or HR people or marketeers, because you can, it's just a bit easier to test product market fit when you're a bit focused. If it's just kind of fully open and you leave it out there in the wild, it's just kind of harder to get that adoption flywheel. And two, you'll just get so many product requests, and you'll kind of have a roadmap that's influenced by so many random people that just kind of makes it a bit hard. So focus, I do think, helps. Or it could be by stage, early stage startups, or banks, or whatever that may be. And always having an eye to not overfitting for that specific kind of early cohort, but and listen, there are many examples of companies that have started with like a small subset of the market and expanded from there.
Then just maybe a last question. Then the challenge, I think, is always to communicate this as a vision, because when you work in early stage and we in our case we do mostly cold outreach because we are still building our network. And then the challenge is that I have to present the concept, which is a very digestible, but if I add there the vision where we are going, which is becomes a little bit fuzzy, and if I remove the vision, we look small, and I'm always trying to balance that. Like not every day I can get in a conversation with you for 30 minutes or with someone else. It's very difficult to get to that conversation where I can explain the vision because I have 20 minutes out of that. So my question is just as an advice from your side, should we still focus on a niche and maybe try to add how it scales to other niches, and then vision will come in the call and focus our pitch deck on getting the call, or we still should add a vision?
Yeah, okay. So I think I would differentiate what you're communicating with investors versus customers. So I think for customers, you do want to have that. And by the way, it depends on what stage you are, and kind of who you're talking with your customers, right? Because let's say if you're talking to a large enterprise, right? If you're speaking with like some individual marketeer or so, then kind of having that focused messaging, hey, we'll solve your problem. That's what matters, right? If you're speaking with someone more senior, you kind of have to have that high level vision to be able to
articulate. Yes, yes.
Yeah, and kind of gather their interest, because otherwise they just want to kind of put you on the radar. And I think with investors, I think you can communicate. Ideally, you can have a way to do both. I mean, I would definitely start with. I mean, you should find a way to lay out your vision. Faster than 20 minutes, right? So, for example, UiPath, one of their visions, say a robot for every person, right? So that's kind of a broader vision, longer term. You kind of get what they want to do. It's obviously not in the very near term, but it's like a nice kind of cool vision for later down the road, right? And then you can kind of zoom in terms of what they actually do right now, or kind of when we back them, kind of what they were doing back then, right? Which is more specific, kind of, around RPA, and yeah, that's a specific technology working in specific industries, And by the way, since then, there's a continuum, right? Because they've expanded into RPA, from RPA to this hyper automation vision, and kind of doing more adjacent ways. So they're kind of on the journey towards that robot for every person, and kind of expanding and expanding and expanding, right? So I think it's great to kind of get, folks excited with that broader vision. It's also kind of good to show that you're concrete and able to execute on kind of something that's kind of quite specific for the market now. Because you also, with investors, you don't want to, you don't want to be focused on the niche thing, because people don't see why this is valuable. But you don't want to stay only at the high level vision thing, because then people wonder, hey, will you be able to execute or get any traction on this? So.
So basically, I have to find the balance between both.
I would say so, and kind of find a way to articulate and communicate both succinctly.
Yeah. Okay. I think that's the toughest part in early stage, to make.
It takes a while. It's easier said than done.
Yes. Yeah. But thanks for the advice.
Cool, guys. I think we're kind of done. Alex, can you please instruct me here? If you have any last questions, you can raise your hand, but we'll be quick about it.
Yeah, sure. We'll definitely prioritize that. If you have a last question, final thoughts, something that you want to express to Andrei for the next couple of minutes, because at the end, so the last minutes, we'll recap some of the key points mentioned throughout the session by asking Andrei again 2 or 3 questions, and also capturing this as an interview that will be published on the How to Webs channels. So definitely last shot to ask a question, state anything that you want. Also for you, Andrei, if you want to say something or ask something also to the founders before we move to that last phase of the session.
No, this is great. I really appreciate everyone's question and time here.
I have a curiosity.
I know we're eating into your weekends. Yeah.
If not, I have a curiosity because there are a lot of opportunities right now for early stage tech startup founders, also from the region, not to mention due to the recent successes that popped out from Eastern Europe. But what are the risks with so many financing rounds and the inflation going so high from each round to the other? What would you advise the founders to mold themselves into the risk that are not so probably not so well seen at the moment into this market of?
Yeah, well, I mean, there's multitude of risks. There are some risks that these financings happen too fast for folks to get to know each other well, and then you realize you're stuck with someone who tells you to work 24/7 or kind of provides you other bad advice. So that's one. Two, it's especially when early on, it's not great to be overcapitalized, which I know it's not an issue in some parts of the world, but definitely some of the main hubs, you have some companies raising a lot of money very early, and then you end up being a bit sloppy and spending money in areas where you don't have real proof points. So there's something to be said around having some constraints early on, because that forces you to be, to prioritize and spend on what matters. And I think that efficiency muscle you build early on serves you very well afterwards. Yeah, these are probably the two.
Thanks for that. Yeah, so now for the last phase, I'll leave Bogdan to recap a couple of the things that you mentioned during the call. I'll also pin your screen.
I have to recap, or he has to recap.
Actually, we'll ask you again a couple of the questions just to recap some of the statements that were the hot points of the discussion. Small ask before we do that, could you tilt a bit your screen or your camera towards you so we can see more of your image, Andrei?
Yes. So like if you can, because this will be published on our Facebook page. So we want to make you look as good as possible. Cool. And I have to ask the question. So I mean, I can ask.
By the way, do we need this? Should we keep all the other folks on the line?
Yeah. That's a great recap for everyone. Yeah.
Are you sure? Because I'm just conscious of people kind of going to their weekends. So
definitely, if they want to jump off, they're free to do that.
Yeah.
We haven't made it mandatory to nobody, so all of them are here on their own request. So,
all right, okay, guys, feel free to.
They can jump in and jump out whenever they want to. Okay, so 2 or 3 of the key things that we've been discussing today. Tell us more about. Well, let's recap actually. Sorry, your thoughts about. Sorry. Technical issue. So let's do a recap of the most important themes that you've been looking at when it comes to investing in startups right now, like the general tech landscape and that.
For sure, and we mentioned some of these in our discussion. Definitely Web3 and kind of the blockchain world. And we're seeing blockchain permeate many sectors beyond crypto, whether it's gaming or broader finance or even the creator economy, things around publishing or music rights. And it's amazing to see how decentralization can reshape many old industries in a way where kind of these economies are much more, let's say, fair towards creators as well as fans, in a way where there's less value accruing to centralized platforms, and where there's just more openness and transparency with how your data is used, how the economics flow, and how these platforms build and scale their products. So that's one area. And then more broadly, we're spending time in areas like low code, no code, embedded fintech, broader creator economy, and yeah, many new sectors which are altering how we live our lives on a day-to-day basis.
What are some common traits of the best founding teams that you have worked so far? Some of the things that you have seen help them succeed and build enduring companies?
Sure. So it's a combination of things, and many founders excel in many different ways. I think having a unique insight into a market helps a lot, and that insight can be developed from one's past experience or just by diving deep, for a few months or years into a sector. 100% relentless focus on a problem, it's hard to be a founder part-time. So showing a strong enthusiasm and passion for what you're doing is key, because that will also enable you to rally folks around you, right? Whether it's investors or early employees or great advisors and mentors. So we're, definitely backers of people and folks who are very keen to build something durable and special. And we're there to provide all the resources we can around them.
Cool. And one more. How should founders build their relationship with their investors, and what is a good relation to have with your investor?
Sure, I would say transparent communication is key. It's always great to learn both good news and bad news as soon as they happen, because that's where you can kind of iterate quickly on a response, on a remediating action, or next step to be taken. Us as investors, we like to earn our role as being that first call whenever you have an issue you want to discuss or a big decision to be made. And I think having that open dialogue with your investor is key, because the more you invest in that relationship, the more you build that rapport, the more you'll get out of it beyond that initial capital.
Excellent. Are we good, Alex?
Yep. Thanks a lot. Let's thank Andrei again. Wish him a good evening. Thank him for his time, and to you founders that joined the call.
Thanks so much, team. Appreciate all your questions, and thank you, Bogdan and Alex, for organizing.
Thanks everybody. Thanks for joining us. Andrei, thank you so much for your time. And honestly, looking forward to have a beer together in London somewhere in the future.
I look forward to that as well.
Cool, excellent.
All right.
Thanks everybody.
Team. Have a great weekend.
Bye.
Bye.
Thank you. Bye.
Enjoy. Bye.